All right, back to work. Man, what another fantastic day today. Boy, love seeing folks making money with us in our morning trade room. Hope you guys made some money as well out there. But it's back to work tonight. We got one more day left of the month tomorrow, last day of November. We got one of the biggest news reports of the week tomorrow. And it looks like we might have a big reversal on our hands as well. So we have a lot to talk about tonight. A very important video here for this evening. I have a lot of great trades. I'm tracking for Thursday, the last day of the month of November. And I'm going to go over my favorite trades in the video tonight. That you guys have a game plan to make some money as we finish up what has been a fantastic month of November. Now, before we jump in and get the lesson going tonight, if you enjoy these videos, make sure you subscribe so you don't miss tomorrow night. And hit that like button for me. Give me a thumbs up here on the video. Thank you so much for tuning in, stopping by, supporting the channel. Enough of the intro, though. Let's keep the good times rolling. It's been a fantastic week, been a great month so far as well. A lot to be thankful this time of the year, isn't it? Now, looking at the Nasdaq and the S&P, I got my 60-minute time frames loaded up in front of me. I like to use the 60-minute charts to give us a bigger picture look. It makes it easier to plan our trades for the following day. And later on in the video, I'm going to drill down to some tick charts. Tick charts are where we find the best entry tactics, the entry strategies for tomorrow as well. So what are the 60-minute charts telling us right now? Well, boy, I'll tell you lots of important clues right now on the 60-minute. We're definitely still bullish overall. You can easily see we're still a bull market overall, but we've been watching these ranges for the past week or so, haven't we? And you probably noticed, right? We had that big run up, and now if the sellers get what they want, they're going to probably finish off this rotation back down and complete that pendulum swing on the S&P down around 45.26, on the Nasdaq potentially, right? Range goes up and trying to rotate back down 15,837 on the Nasdaq. So, boy, as you can see, especially on the S&P right now, that this channel is barely holding on, it looks like right now. So the channels are kind of the last defense, it seems like right now, for these buyers. So we're going to take that into account for the entry tactics we use tomorrow morning, though. But I see a lot of great shorts on some reversals here for tomorrow. Maybe some longs if we get lucky tomorrow as well. I'm going to break it all down here in a moment. Before we dive into the tick charts, though, and talk about the entry tactics for tomorrow, let's check the calendar, because there's actually a couple things that, one, I'm sure you're already aware of, but one you might not be aware of. There are three things on my mind here for tomorrow. First things first, we have some big news out of China coming out overnight. We have the Chinese PMI numbers coming out overnight. Usually sometime between 11 o'clock and 12 a.m. Eastern time, we'll hear from China overnight. It's tough to tell how much that will affect the markets overnight, but just be aware we have Chinese PMIs coming out overnight. Tomorrow we have what we've kind of known about all week, which is one of the bigger news reports of the week this week, the personal income number, also known as the PCE deflator, well known as the Fed's favorite news event or indicator of inflation. We can imagine everyone watching that 8:30 number here for tomorrow. And then also the third thing is tomorrow's the end of the month. And the end of the month into a new month will usually give us an uptick in volatility. If you haven't had enough volatility yet this week already, the next 2 days, Thursday and Friday, well, as we transition into the new month, we definitely expect an uptick in volatility. So be aware of that PMI number out of China overnight if you're trading overnight. Personal income tomorrow morning, 8:30 Eastern time. And of course, I will be looking forward to some more volatility tomorrow, next couple days, in our trade room with all the members. Now, back to our charts. You know, it's good to know when the news events are here for tomorrow, but the money is made on the charts. Let's now go over my favorite trades here for tomorrow. I want to make sure you guys have a game plan. I want to make sure I have a game plan to find some nice, easy winners for tomorrow as well. We'll start first, of course, on the Emini, and we'll finish up tonight on the Nasdaq. As I mentioned in the introduction, this range is a big part of the game plan for tomorrow. We go up and we're trying to get that rotation back down again. The one big wrinkle right now is we're still overall a bull market. So I like the idea of some shorts but we might need to get some bull traps involved here because you can see we're kind of hanging out right on the low of this big bull channel. Why don't we drill down to our tick charts? Remember, the tick charts usually unlock a lot more details, and we can use that to plan our entries here for tomorrow. This is a 7,000 tick chart you'll see in the upper left-hand corner, and that is the 21 EMA, in case you're joining us here for the first time on the YouTube channel. Nothing special about that 21 EMA, just a default 21 EMA. There are two really important clues or aspects of this tick chart. The first one, of course, is this range. If you guys know me, you know how much I love range-bound markets. We talk a lot about range-bound markets in our free video classes. I believe that once you learn how to use ranges, it just unlocks so much money-making potential. For most traders, once they learn ranges, they get a lot better and make a lot more money. Ranges love to rotate, right? They rotate down, up, and again, we have this huge rotation off the high right now. And so at this point, if the bears get what they want, they're going to punch that ticket down around that 45.26. You can also see, of course, the market now kind of rolling and beginning to grind down here right now. This sets up one of my favorite chart patterns. We call these pop and grind channels. So now you got to think above all these highs, you got to think the bears are waiting above all of these highs right now, trying to finish off that rotation going lower. The second kind of clue on this, or the variable, is we're still bullish overall. So if I'm trying to be a short seller in an overall bull market, at least in my vision, the easiest way, the consistent way to make money is to use bull traps. So bull traps, specifically one pattern I call crown reversals, are probably where the easiest money is to be made here for tomorrow. So as we rotate, right? As we rotate or try to rotate off of that high here, as I mentioned before, right? I would imagine we're going to keep on drawing trend lines off these lows, up around these highs, and I'll bet above all of these swings up here, including that big high up there, I'll bet there are a lot of ways to use bull traps, right, for shorts back down. Now we talk a lot about bull traps in our free video classes, but if you're here for the first time right now, what does a bull trap look like? Well, think about this pattern. As we pop up, again, we're overall bullish overall, so the easiest way to make money in these situations is to trap in the buyers and use their exits, use their pain, their stop losses to make money with. That's fuel, right? So what it looks like is as we pull back, let's see if buyers will try once to go higher, pull back, try again to go higher, and this is the kind of the nuts and bolts of this pattern. It's a lower low in price and a trap above that high. You'll actually see one right here if you zoom in on that, right? It kind of goes up, the buyers try once, buyers try twice, bull trap, back down again. There's one right there as well, right? We go once, we go twice, bull trap, back down again. So I don't have a crystal ball. It could be any one of these levels overhead. It really could be. My favorite trade though will be going up, trapping those buyers in, buyers once, buyers twice. Remember, lower low in price, that trap high, and just like I talk about in the free video course, you want to get that nice strong signal candle closing below the 21 EMA for that run back down, right? So this is the nuts and bolts of that pattern. Could be here, and really could be way up here as well. Now, there are always kind of some variations of this. You know, for example, we oftentimes see something we saw right here today where it'll race up and then almost immediately V-top and then begin to grind back down again like that. If that happens, all you do is draw a trend line off the lows, bring it up around the high, look left, and look for that bull trap up around the high of that channel, right? So draw a trend line off the lows, pin it up around the high, look left, find some prior swings, and what I'm trying to do is combine that prior swing along with the top of that channel, right? So again, it's the same basic idea, right? It's lower lows in price, and it's that again, we call these bull traps. You guys are learning these, of course, in our free video course. Now, the bull trap is kind of the easy part. One thing that you kind of want to be aware of, and again, because we're overall bullish right now, let's say, for example, we may also run up, we may double top. If we double top, it's the exact same game plan, all right? So if we run up, double top, same thing. I want to keep on trying to get those bulls locked in and keep trying to get those bull traps. Use those stops, right? Think about that, right? The buyers try a couple times. Their stops are now going to fuel that move going lower, right? So bull traps are the name of the game. Now, if you're watching for the first time right now, this might be a brand new language for you. Bull traps, rotation, stops as fuel. Don't you worry. I teach all of these setups. I have probably over 100 examples of how we use bull traps to find lots of winners in our trade room. I'll put a link up there for you in the upper right-hand corner. Grab that link that popped up there. Take that free video course because, first of all, the strategy I teach in that short video series will teach you a stupidly simple trick we use in our morning trade room to know exactly where the best winning trades are going to be that day. And on top of that, I'll teach you 4 of my favorite entry patterns to help kickstart you making money. If you're not making consistent money right now, if you're missing too many good trades, if you're still trying to qualify for a funded account with Top Step or Apex, grab that link, take that free course. It's perfect for someone trying to make another income stream from trading, to make full-time trading. You'll love that free video course. You'll learn all about everything I'm talking about here in the video. And also to keep in mind too, if you can't grab that link up there, I'll put all of the important links down the description of the YouTube video. I'll put the free course links. I also post a lot on Twitter during the week in between these videos. If you're on Twitter, give me a follow. I'll put my Twitter handle in the description there as well. All right, guys. So now we get a pretty good idea if the market jumps up. We know now how to trade it right with those bull traps. Now, one important question is, what if we keep going lower? Right, if we keep going lower, really not a lot of this changes. The most important thing is that as we go lower, this momentum will continue, right? It will continue to build up for the bears. I just simply don't want to chase after it. The term that we like to use in our trade room is to short the bounces, right? Short the bounces. So if we continue to roll over, right, and keep rolling lower, I'm literally going to adjust this channel down a bit further, right? I'm going to keep on looking for those prior swings, right? And I'm going to keep on looking for that pop-up, trapping in those buyers, right? Bull traps. And back down. And again, remember, keep in mind, it may end up really running higher or V-topping, right? And then back down again. If it V-tops, don't chase it going lower. Find those traps. Keep looking for those bull traps above those prior swings. Remember the format, the structure of the entry pattern. Now, here's a question for you. How do we buy down here? You know, because eventually we'll probably end up down around these lows, right? How do we buy off that low? Well, this is going to be a little more difficult because if we find our way down around these lows, we have now a lot of bearish momentum. We're still bullish overall. You'd expect a lot of profit taking down there. You'd expect the buyers to come roaring back in around that pendulum swing target. But how do you time the perfect entry on the opposite side of this range? Let's grab the NASDAQ here. I don't want to keep the NASDAQ waiting too much long. Give some love over to the old Nasty Nas. You can see here right away on the NASDAQ chart, same basic idea, right? We're still bullish overall. This channel might be the last kind of saving grace here, the last hold here for these buyers until this thing rotates down right above the high, right? That kind of range rotation we talk about a lot, right, in our video classes. So we know the game plan is, we know the situation is pretty similar on the NASDAQ. Look at that chart on the NQ right now. Over to our tick charts, same basic idea, right? Get a range in front of you. Markets, range bound markets, they love to rotate. So the amount we go below the range, the amount we go above the range. Look at how symmetrical we call these pendulum swings, right? The amount below, the amount above. Look how symmetrical that run going higher is, and sure enough, right, we get that run back down again. Now at this point, we have a pretty good idea of where the market wants to go. The amount above, the amount below, that puts us down around that 15,920 12 area, I would definitely expect now with this overall bearish momentum rolling lower here. Same game plan we talked about on the E-mini, right? Find those prior swings and just short those bounces, right? But again, when I talk about short the bounces, get up, trap those buyers in, because we can't forget about the fact that we still are an overall bull market. It's not like we're a bear market right now. If I was a bear market overall, I'd be a lot more aggressive on these shorts, right? For all I know, they're going to pop up and run this thing back up to retest those highs and then drop it, right? I don't want to be getting too aggressive on the shallow pullbacks. That's why I have to kind of be a little more selective with bull traps on the entries. And again, if we do keep going lower, it's the same basic thing, right? What I would imagine though is the Nasdaq may start going a bit lower here, and we may start to kind of steepen up that channel a little bit. You know what I mean? Right now, that channel is a little bit flatter than we probably want it to be. But if it keeps on rolling lower, I would imagine we'll kind of steepen out that channel, right? Find some more of these swings to keep on looking to short those bounces, right? With those bull traps. Let's now get to the point I mentioned earlier. How do we buy down here? How do we buy down here? Now, in our video classes, we talk a lot about these two important questions, and that is, how is location and how is momentum? One thing we teach a lot in our video classes is just to be aware of the combination of momentum and location. So I like the idea of buying down here because, again, we're overall a bull market. So it's a great location to be trading. But the problem we have right now is momentum. Momentum is not going to be very easy to pick that bottom. What is very likely if the market finishes up this pendulum swing, it's very likely we bounce and retest the low and then get the move back up. All right, because again, we have all of that momentum, right, coming off of that high right now. So we got to be very careful trying to pick that initial bottom right there. And can you guess, just take a wild guess, what type of entry pattern I'm going to use to pick that bottom? Well, think about it. I need to trap in the sellers, right? Because I'm going to use their stops to fuel. So as we take out that low, I'm not in the business personally. I don't really see much value in picking tops and picking bottoms. It's very difficult to tell how far it will go. What I do is I will identify areas I want to be trading off of. Then I won't try to pick the bottom. I'll wait for the bears to come in and let them commit. Once those bears try once, and again, remember, in this case, we're overall bullish. I like the idea of being a buyer down here, right? But I hate the idea of buying into that freight train as we roll off of that high. But if I can get the sellers trying once. Remember, sellers want to sell high, right? So we got to go to a higher high in price, get those bears trying again. And this is that same trap pattern, but it's just flipped, right? This one is now for the bull side. So bears try once, bears try twice. It's a higher high in price. And again, in a trap below that low. And again, like I talk about in the free video course, you want to get that nice, convincing close above the 21 EMA. And on this particular type of reversal like this, I would look for that pop up. I'm going to look for that 1-to-1 first target. Bring that stop up to my point of entry, because like I mentioned before, it may keep on rolling, but whenever we see this much momentum like this, right, it's a good chance the underbelly of that range holds and we end up running right back to retest the low. This is why a bear trap is so critical in this particular type of entry pattern, because I do not want to be buying it as it goes higher, because you're potentially running right into a bull trap, right? Makes sense? So again, I call these crown reversal patterns. You'll hear me call this a crown reversal in our free video classes. It's ultimately a bear trap. 2 tries for the bears and buying that reversal. And who knows, right? Maybe we get lucky and the thing really rips, right? Who knows, right? But I'm preparing for it to roll over and retest that low. Now, once we retest that low, this is usually where we can be a lot more aggressive on the entries, because all the bears who sold that bounce, right? I will be one of them tomorrow looking to short the bounce. We mentioned that earlier on the S&P, right? So if the bears get short on the bounce, which you have to assume they're going to try to, their profit targets are probably going to be where? Back around that low, Okay, this is an area that my first mentor would always say, this is a situation where everyone is a buyer, right? Everyone is a buyer. Why do I say that? Well, because, think about it, right? The buyers are going to buy low. That's what buyers do. We're in an overall bull market, so you got to think that buyers are going to buy that double bottom. At the same time, if sellers are shorting off that high, their profit targets are down around that low as well, right? At least a good chunk of those profit targets be at that low. So if the bears are getting out of their shorts and the buyers are getting in, yeah, everyone becomes a buyer in that scenario. What I'll do in this case, though, is if we do run up and retest that low now, and remember, it could be a bit underneath that low too, right? A lot of times these things will overshoot that low by a bit too, right? So it doesn't need to be an exact double bottom by any means. But now, with the bears who are short here, right, with them taking their profit, we assume big lot buyers are buying into that area here. Now let's see if we can get another one of those bear traps. We don't need to be as selective on this one because now we've retested that low. Ideally, I would love to get a bears once, bears twice, and get that trap, right? That would be the prime opportunity to be a buyer there. Not required though, right? In these cases, these double bottoms, oftentimes just 1, 2. Think about now where stops are going to be, right? For those sellers, right? Stops get run here. Now think about it, right? If we can rope in some rookies down here, how do you get out of a short position? You buy your way out. So now we have buyers buying low. We have sellers taking profit, buying their way out of their short trade. And then now we got some rookies getting stopped out. Everyone becomes a buyer. These can be very explosive. And the good part about these two-try failures, we call these two-try failure patterns in our trade room, the reason why these can be very explosive, we know where the market wants to go at this point. It wants to go back and take out that high. And there's one entry pattern I always look for on the way back up. And you guessed it, it's a bear trap. It's a bear trap. You know me, I love traps, right? Traps will change the way that you trade. I'll tell you right now, if you learn how to use ranges and learn how to use stops as fuel, you'll be a completely different trader a few weeks from now by kind of using this technique. I have helped thousands of people turn the corner in their career over the last 10, 15 years in our trade room. So a failure, again, not just a failure, a double bottom with a failure. And then as we go higher, it's that higher high in price and that bear trap. Really, ideally, I want that follow-up entry before we take out that high, unless of course it just rips, right, and it kind of blows right through it, then we should be fine because again we expect the market to want to rotate right back and forth as we go. All right, guys, makes sense. So again, as we go lower, we're shorting the bounces with bull traps, right? As we make our run lower, we're going to try to leverage or harness the power of a stop run, right? To try crown reversal, expect this thing to pop up and roll back down, take out that low, trap those bears in, right? Punch those stops, and you know where it wants to go. It wants to go back up, hit that for a target, and see if we can hold on to a runner. Hopefully we get lucky, a nice big run tomorrow afternoon. All right, guys, we've covered all the bases. I do a pretty good job at anticipating these the night before, but you know tomorrow the market's going to throw us a curveball. We got news out of China. We got the big PCE, personal income number, tomorrow. There are going to be some curveballs tomorrow, but that's exactly why we have our trade room. Every morning we get together, we trade this stuff together, 8 o'clock Eastern time. I can't think of any better way to learn to trade than do it with me every morning in our trade room. I'll put all the important links. I'll put the free video class links in the description. I'll put my trade room membership information in the description. And again, if you're on Twitter, follow me on Twitter for more updates in between these videos on YouTube. Questions, any issues getting access to our video classes, don't be a stranger. I'm always here to help out. Don't be afraid to email, call. We have live chat. So if you need help, definitely feel free to reach out. We're always here to help out, especially if you have trouble getting access to our free video classes. All right, guys, boy, been a fantastic week, been a fantastic month. We got one more day left. Let's finish up the month with some more green tomorrow. Hope you guys learned a bunch tonight. Hope you earned a bunch tomorrow, and hopefully I'll see you sometime soon trading along with us, making some money in the morning trade room. As always, my name is Joseph. Thanks for being here. Thanks for watching. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.